The recent banking crisis is leaving customers and small business owners wondering where's a good place to park some cash. So how should you choose a bank, and how do you know that it's the safe decision? Here to help us answer these questions, we've got Jean-Pierre, who is the founder and managing director of ACES Advisors, as part of our financial advising segment, brought to you by Flex Shares. So how does somebody go about selecting the right bank, especially as they've heard a lot about the banking turmoil and the banking crisis that has ensued that might have them wondering where the right place to park cash is?
Well, it's important for an individual to understand how SIPC insurance and FDIC insurance operates. So it's important to understand that $250,000 is the level of FDIC insurance. So if you are having a proper allocation, anyone under a $10 million allocation or asset level will probably not have $250,000 in cash. So for the average individual that is not looking to have over a 5% level of cash in a portfolio, we're going to be looking at somewhere around 2 or 3 different banks that they can use to maximize the FDIC insurance. So to use one bank might not be the proper way to do it anymore if you have over $250,000 in cash. But for the average individual who has under $5 million in assets, it's probably best suitable for them to maximize the FDIC insurance.
And Andre, I would imagine for those folks who do have those large cash positions, that maybe they want to be earning money on that cash, so they don't have it parked in the bank, but they have it in other assets. But even when they are trying to figure out not just to where to put their savings, right, but who to bank with, whether they're talking about a mortgage or they're working through you to figure out who's going to manage the assets, right, as a part of your financial advising. What are some of the criteria that you talk to people about, especially now after all that has happened?
I think it's more important than ever to do your homework and your research in regards to where you park your money, right? The days of being able to go to any bank and thinking that they have the same amount of security, those days are over. So to do your homework about the balance sheet and understand the risks that each bank is exposed to is very, very important for the everyday individual to do. I do believe that it may be out of the scope of many people's ability to understand. So I think that it's important to work with a professional that has a specialty in finances and banking to help you make that decision if you can't make it on your own, because at the end of the day, it is your own money, and it's important that you protect it for yourself and your family.
Why continue to park kind of large sums of capital in the bank versus putting some of that capital to work? And how do you go about, in that case, if you do choose to go the bank route, making sure that you're selecting the right account for that capital to grow interest?
Well, I want to make it clear that I don't think it's prudent for the everyday individual to keep over $250,000 in cash in a bank. If they are saving for retirement or for the long term, it's probably better to diversify your assets and own some investments, to own some bonds, to own stocks, equities, and so forth. I do believe that cash is an important part of anyone's long-term investment portfolio, and it allows you to move with and diversify and rebalance as you see fit. But to be honest with you, the everyday person, I don't believe $250,000 in cash makes sense for them. And I do believe that the reason why a lot of people are in cash is something that I like to call paralysis by analysis, that they're going through with the overload of information that they're going through on a day-to-day basis, trying to make decisions for themselves. So in today's day and age, we have more information flowing to us that influence our financial decisions every day. And back, let's say, even 15 years ago when I started, it might have been 10 sources of information that you were using. Nowadays, it's closer to 50, 60, 70 sources of information. And this can be confusing for the everyday person, which can either do one of two things. It can lead them to make more decisions than necessary and try to be overly tactical, making several moves a day, several moves a month that are not in their best interest, or the opposite of that, which I'm seeing a lot, is paralysis by analysis, where they get so much information that they decide to do nothing and they decide to stand still. And as we know, with inflation moving the way it is, that's not the best decision for the everyday individual as well.
And Andre, just really quickly here, is that what you're hearing from your clients right now? Are they sort of freaked out by everything that's been happening this year?
Yes. I think we've been spoiled a lot over the past 12 years or so in regards to the stock market having a long bull run. A lot of people, especially during the pandemic, decided to grab their finances and decide to start investing on their own, doing research on their own. And I love the intensity and the thirst for knowledge. In 2020 was definitely an interesting time in the investment world. But the flip side of that, when we return to normal in regards to investing, has caused a lot of people to not understand what's going on, and also have a total influx of diversified opinions and financial data that has made them pretty much stand still in the middle of the street like the deer in the headlights looked. And, with that much information coming in and not being able to process it and not having a team in place to understand these differing points of view, it's caused a lot of my clients at first to have a paralysis by analysis. But after you sit down and you have the conversation about what the data means and how it affects their long-term plan, they can come back to normal, come back to baseline, and start making decisions that influence their long-term life and their long-term financial plan. Again,
deer in headlights, fainting goats, paralysis by analysis. I think we all have now the phrase to keep in mind and what not to do, but to hopefully take some action here and make the decision with the factors that can ultimately input that. Thanks so much, Andre Jean-Pierre, who is the founder and managing director of ACES Advisors.